So looking at where interest rates are right now, so on Wednesday, CPI came in, and what we're seeing is that inflation has been a little stubborn right now. It appears to be moving sideways. Next week, the FOMC is going to be meeting, and the question really is, are we going to see additional interest rate cuts?
Now, some of the economists that I've heard expecting a quarter here and maybe a quarter of a percent each of the quarters next year. Is that something that might work?
Yeah, so it seems as if that the market is expecting a 25 basis cut next week, but there are now some people who are erring on the side that maybe we should pause. The expectation is probably in the January meeting as well. It might also be another pause. Currently, right now, the FOMC is in a blackout period, so they can't really comment until they meet next week. So we're going to have to wait patiently to figure out what are they going to do moving into 2025.
And a lot of lenders and a lot of their clients who are trying to work on taxes and their books for next year, they're probably wondering, how is this going to impact me? If we get a rate drop, or if we don't, what sort of an impact will that be on those farm books?
Okay, so in terms of working capital, we have seen over the past 2 years that the trend has been a decline in working capital. What producers are dealing with right now is lower income and higher production costs as well. So that's been eating into working capital. From the lender's perspective, looking at the American Bankers Association and Farmer Mac survey, what they have reported is that the top concern is liquidity. Again, looking back at working capital and just seeing how much it's been declining going into 2024 and 25, this is going to be a top concern. Gary Schnittke kind of covered in this first presentation where the most important thing we can do right now is just keep our costs low going into the following year as well.
Okay, and liquidity is going to be an issue for really every farmer, no matter
Yeah.
what part of Illinois they're from.
Absolutely, and across the country. I mean, this is a trend that has been going on, and going into 2025, again, we're just hoping that we do see a little bit of respite when it comes to production expenses, at least leveling off. The USDA did announce that the expectation is that production expenses will probably start to decline, so there's going to be a little bit of relief from that front.
Okay. The bankers that you talk to, you read about what they're thinking. What should a farmer know about what his lender is thinking about?
Right, so expect to experience tighter lending standards over the next 12 months from this particular survey report. What they're indicating to us is that lending standards are going to tighten. So expect that to be part of the process.
Now, when you say lending standards will tighten, help me understand what that
They're
means.
going to be a lot more selective and they're going to require a little bit more. So if you're thinking about purchasing more acreage, the expectation is going to be a little bit more tighter. Again, this is more of a risk management tool. Again, they have to also manage their risk exposure as well, and they also have visibility on the applicant's, financial characteristics as well. So ideally, what you'd want to do is to demonstrate that you have financial resiliency on your farm, good liquidity, good solvency, and also make sure that your operations and your visibility of all your numbers are well understood and looking good.
All of your numbers. We could spend an afternoon on
Oh, we
that.
could, we could.
A lot of ratios out there.
Yeah.
A lot of those numbers the bankers know, but not many farmers really put those ratios together and look at their numbers.
Yeah, so we're fortunate enough to have FBFM. So our FBFM data set allows us to report and get an understanding of what at least the average or the median looks like across the state. But you're right, not a lot of people have an understanding of what these numbers are.